And we are live. This is Travis from Carter Cow Capital. Uh, Expert advisors on YouTube, Travis on YouTube. Hope everybody's doing very well today. It is February 21st. I have 9:06 p.m. This is another episode of Trade with Travis, episode 319. We got to go through the disclaimer. Then after that, we get right into the charts and take a look at some pairs. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education. And from that education, you can be able to make your own informed decision. And understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, as we end up going through and taking a look at pairs, I'd like to be able to find something that's in a trending market only. Obviously, we have trading strategies for all three trading type of styles, but like to be able to find something that's in an R2 or R3. I explain that along the way. Want to be able to have time frame alignment, meaning that the weekly and the daily are trading in the same direction before we end up deciding on a trade. And then after that, we'll take a look at overbought and oversold. Um, Overbought and oversold stochastics to see if they're in the opposite direction of the time frame alignment. That means that it's kind of ready to be able to go. We want it to be in the same. We know that we want the same direction, but we want the opposite movement. So to give you an example, if the weekly is bullish and the daily is bullish, that gives us the opportunity to look at the trade. So we want to see if the market is a little bit oversold, so we can be able to get into a buying opportunity. And by being able to do that, you'll look at it through a counter trend line break with some economic news, and then after that, making sure that you end up having a strong risk versus reward when it comes down to that. As we take a look at what's happening today, from a economic news standpoint, there's really nothing that we have to pay attention to aside from Fayette Bowman end up speaking at 1300 hours. So we're looking at right around 2 o'clock, I believe. Um, and we end up going from there. So, really, there's no economic news, which means that the charts are going to end up being way more important than what we end up seeing with everything else. So, I'm going to jump right into and take a look at a few different pairs. I've been paying attention to the pound United States dollar. I've seen that this market was inside of a consolidation triangle and inside of a long-term consolidation from right around 127.75, and with the support. Uh, let's just say 125. 125 would probably make a little bit more sense than the other numbers that I've been taking a look at when it came down to that. So if we take a look at this from a weekly standpoint, just kind of breaking it down and kind of seeing what the idea was in being able to take a look at this, we've seen that this market has went into, or this market has been bearish, and it's showing signs that it's going to continue moving bearish uh, for the near future. And in taking a look at that, we can see that we have this channel that is somewhat. We have a little bit of a channel that's been working for a very long time. It's just that right now we're getting close to the top of resistance on that, which means that if we're going to end up seeing that, we just go based off of this pattern. We should expect that the market will end up falling. Now, looking at this from a Fibonacci perspective, I would go back and take a look at this overall area. Let's see. It was a new high right there, broke down. A ended up getting broken. So I would take a look at a field from here to here to kind of get an idea about where the market is going. Currently, right now, what ended up happening was that the market ended up making a retracement all the way up to the 618, which is a very good spot to be able to get into. We ended up seeing about 4 weeks of indecision before the market started to be able to fall down. And currently, right now, we're in a position of consolidation to where once it ends up breaking below 125, then we have a strong indicator that this market is going to truly move to the downside. So that's giving people the thought process of being able to say, hey, if we get a selling opportunity with this counter trend line break, uh, to be safe, I would look at being able to place my stop loss somewhere above 131 if you're doing this for a long term perspective, because you're expecting that the market could fall all the way down to 1.1350 if that ends up happening from a weekly perspective to the downside. But the problem with that is that when you take a look at it from a daily perspective, we can see that the market is in consolidation, but it hasn't made its move yet on what the actual direction is going to be. And we pay attention to that the market has hit support. Let's see, right here and right here, and started this overall area. We're basically in the middle of this range. And because we are in the middle of this range, it's kind of hard to be able to make a decision on if this market is truly going to fall down or if it's going to end up giving us an opportunity to be able to get into a trade up here at the resistance right around 127. If we can catch it right around 127, then we have a great price of being able to sell it down to. It's basically right beside the 618 again, especially if it ends up rejecting again and we get better value. So with that being said, from a manual trading perspective, I would not look at being able to take a long-term position on this. Short-term position, obviously going based off of what we end up talking about for this market possibly being able to move to the upside, it is showing signs that it is showing signs that it would. We can see that the market end up breaking out of this overall triangle, retested, fell back inside, but only fell back inside the midpoint of where price actually was. So this is giving me an indicator that once this thing moves, it's going to probably end up breaking out and continuing on. So if you are a person that's interested in being able to scalp it, then you have a buyer, you have a buying opportunity from there. If we're going based off of fibs or anything else like that, I'll place my stop loss below the actual low where the market actually ended up going, and then have the expectation that from a scalping opportunity perspective, you could possibly be able to get out at 120, 126.82. 126.82 would end up being that short term position that you can look at. Now you can place your stop loss in two different positions to get better. Oh shoot, let's see. I did it 4 times. Sorry. Let's try this one more time. Delete, and let's put this one right here. Then we'll talk about a long term example as well. So entry will be literally right now. Stop loss. Stop loss. You can place it below the swing low of this. That'll give you about 58 points. That'll be about a 50-point scalp, and you can be able to get it from where we are right now. Uh, Now, from a risk reward standpoint, 0.83. I don't like that. If you're really trying to give yourself a better risk reward value, I would place my stop loss right here, just below that last swing before the market actually ended up breaking out of that area. So you're talking about right around 126.13 or 126.10 with a take profit of 126.81. That would be take profit one, take profit two. If you're doing this from a long-term perspective and being able to get in, you can place your stop loss below the swing low, give yourself a little bit more room. Look at the take profit being right back up here at the overall highs where the market ended up finding resistance. If you want to be a little bit more safe, you could possibly end up saying right around 127.65. 127.65 seems like a pretty decent number to be able to get in and still get that 1 to 2.3 risk reward ratio that I pretty much like for us being able to do it. So take profit will end up being somewhere right around there, just based off of the highs of that movement. You have your stop loss. You can place your stop loss below the low of the last swing, where the market ended up reverting back to the 618 before breaking out of this triangle, or you can be able to have your stop loss a little bit tighter, which will end up being 33, going after 131. That's a 1 to 4 risk reward ratio for everyone else. So if you'd like to be able to take a look at that one as well, we'll go from there. So buying opportunities on pound United States dollar, I'm going to pay attention to those. I'll place an ID on those. I have my automated systems basically trading those pairs, so I'll let those do that thing. But I am going to end up, I probably may end up entering this on my manual account and taking a look at it. I do like the trade. I come back to it. We'll monitor it, see how everything is going. But this is an active move. 2 hours in the buy zone. You got a crossover from there. I do like what I end up saying. Let's go ahead and go to Euro United States dollar since we're at it. Euro United States dollar. I was looking for a counter trend line break to the downside, if I remember this correct. Okay, it's been a while since I've been on this chart. Looking at a long term, it looks like crap. Weekly is in the middle of consolidation, long term consolidation. Daily is in the middle of that long term consolidation. That's nothing to do on this one. I'm not gonna waste anybody's time off of this one. If you're looking for movements, it'll be scalping opportunities or small little breakout positions for being able to go from there. Really and truthfully, this is not the time to be able to jump after it. I do remember that trade right there that we ended up taking a look at. That was a trade that we ended up kind of proposing last week sometime where the market ended up going up to the 382. We ended up saying two different positions. The first position was being able to get out at the 127 because the market ended up having a slight retracement, but because it went all the way to the 382, 127, 107.20 what's the natural position where it's going to end up getting out. So the Fibonacci ended up doing correct. I'm going to show this and show what it looked like. Let's see. Da, 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 da. Let's see. We will find it if I can be able to find what I'm looking for. Okay, so here, B, C, D extension end up hitting right there. So that's where it went. So that move was over with. Move was over with about at this point 4 days ago. So we're looking at a retracement. New fibs, if we're going based off of that, because we do have a movement now, so we can say that this is your new fib, and that's the new retracement of where the market actually is at this point. Casey, what's going on? Hope everything's going well with you. Um, but that's where it is right now. Now, new fibs are telling us that the new 618 or the sweet spot will end up being right around 1.8850. We can see that we end up having a little bit of support and resistance right here at 1.805. So somewhere around that area will end up being the next spot where I think the market will continue to go to if it's going to the downside. If it remains going to the downside. Okay. Now, with that being said, let me go ahead and take a look at the big three real quick. That'll kind of give me a better understanding about what's happening. If you're not familiar with the big three, that's the United States dollar index, that's oil, that's gold. The reason why we take a look at those is because it gives us more information about what's happening with all the pairs in general. So, last time we ended up taking a look at this, we ended up taking a active buy um, on the United States dollar index. We end up having two take profit positions. The first take profit position was 13,040. We end up saying as soon as the market end up giving us a breakout of this triangle, then we end up having that push up. Literally end up doing it within one candlestick, and then after that closed out, pushed down to the downside. Since then, really haven't paid attention to it all that much. Just kind of taking a look at it based off of previous pairs, we can see that the market is still back inside of this consolidation triangle. Um, and it's done broke out, so it's kind of widened how this market's going to end up reacting. I don't know if it's going to end up remaining inside of this portion of it, or it's going to end up breaking out and kind of making a larger condensed area for it being able to make that movement. But at some point in time, we know that the market is going to push to the upside and stay to the upside. This is the first time where I've seen the market push up, and then after that, actually end up breaking the A from that position. So typically, what that ends up showing is something called a king's crown. What happens for the king's crown is that you end up completing a ABCD on one side, but when a new ABCD starts and starts to break below, typically it end up pushing up towards the previous left or right tip, and then after that falling down. So I don't know if this is the start of a or the setup of a long term move that's going to end up happening, but typically um, when that type of movement happens, you end up seeing King's Crown start to happen. Some people actually end up calling that what is it? Inner Circle Trader ends up calling that what's that? The Silver Bullet, I believe. But literally 7 years ago, my teachers over at MTI ended up calling that King's Crown. So everybody has a different name on it. Let's go oil. Oil, we haven't really been doing much with. But we know that it has a correlation with the Canadian dollar, so being able to take a look at both of those allows us to be able to understand what's happening with the Canadian dollar. I'm going to go based off of what we end up talking about since the beginning of when we end up taking a look at this about a year ago. I'm sorry, about a year ago. This market is in two large consolidations. The first one's at 82.50 to 63.60. That's a long-term consolidation area, and currently, right now, the market since October has been inside of this consolidation where the resistance is $80 and the support is right around 70. So as we see the market continues to keep on falling down but not hit the top of resistance, it makes it kind of hard for me to be able to say that I want to get into a trade without looking at consolidation plays, which will end up being buy support or seller resistance everywhere else does not matter. And currently, right now, we're in the does not matter area. And because that is the case, I'm not interested in being able to take a trade on oil or taking a look at probably the Canadian dollar because they're probably going to end up showing weakness between both of them. So Oil is off the table. Let's take a look at gold. Hey, can you do SPY? Absolutely. We'll take a look at SPY. We're getting close to the indexes. We'll take a look at US 30 and NAS 100 as well. Um, let's see. Take a look at gold. Gold has broken out of a triangle to the downside, starting to truly retest. We were looking for a selling opportunity last week and being able to see if the market was going to end up popping. We can see that that's probably not going to end up happening no time soon, based off the United States dollar and how it's kind of moving. And currently, right now, we're in a no trade zone when it comes down to the stochastic as well. So that's telling me, quite frankly, allow this market to kind of be able to slow down a little bit, and then after that, break the counter trend line break that we have right here, and then after that, we'll look at a movement. That's what I'm going to do. I'm not going to look at, not going to dive into gold pairs. So look, the US yen kind of is bleak on this one. I think that market is probably falling down as we're taking a look at that. Good. So that gives us time to be able to take a look at. We'll take a look at SPY first. It's been a while since I took a look at this one. Let's see. Pre-market is. Okay, so it completed the extension. Get that out the way. Actually, no. Okay, let's get that off the screen. Let's fix it. Give me a second. Let me get all my stuff in order real quick, and then after that, I can start talking about it. Okay, here we go. Weekly finally end up breaking away from breaking into an all-time high. Currently, the market is pre-market at least is at 496. They end up breaking over a long-term resistance of um, at 479. In which they end up making that last high. Now, with that being said, the question is where the market going to end up going. It's kind of hard to be able to make decisions on. Well, I always make a rule of being able to say I don't buy all time highs. Um, Anytime that you end up breaking past this level, if you didn't get into the trade before 479, then it's kind of hard to keep on saying that you want to stay into the trade unless you already done gathered up position. But with that being said, as we end up taking a look at this, let's go through and just take a look at fibs and see what the market actually is. Um, that's your first ABCD that end up happening. Then after that, here's your second one. If we're going based off of the weekly and just taking a look at the long term move about where the market is going to end up going, there goes your A, there goes your B. Market fell all the way down to the 5 position, and the expectation is that it should get up to 509.86. Now, obviously, people are a lot more bullish and look at being able to buy when it comes down to these pairs all the time. But the one thing that I will caution you about that is that we can clearly see that the market is a little bit overbought as well. So the weekly has started to slow down on momentum. It's done push for a very long time. It's in an R3 position when it comes down to being able to get out, which means that you should be looking at being able to buy. But everything is telling me, especially with this indecision candlestick of last week, the market is looking at possibly being able to fall. It probably just fall for a little bit, but you still got about 7 to 11 candlesticks to the downside to where the market could potentially be able to move um, in that direction. So here's your daily. There goes the counter trend line break. There goes the counter trend line from the daily. This is starting to look a lot more like a triangle to the upside or a rising wedge to the upside. Get into starting to look like a rising wedge to the upside. Uh, Long term, that means that the market is going to end up falling down, kind of like a roller coaster. Anytime that you end up seeing this, you're getting all the way up to the top of the roller coaster and then after that falling. But short term from a daily perspective, I think that it still will continue to keep on pushing up. Um, but I think it will end up being short term moves. It'll only be scalping type of moves. Uh, may end up getting up to what we said 508. What's the take profit? What we say? Yep. It may get up to 508. Once it gets up to 508, then you can expect that more than likely it's going to end up being some type of fall that will end up happening after that. So you're looking at a long position pre-market, you'll probably end up being something like that. Gonna lead us up here for a little bit. Go to the 15-minute. The market hasn't opened up yet, so we don't know if there's going to end up being any gaps or anything. 15 minutes telling me that it's in the sell zone. Uh, we have a counter trend line break, but the market is about to open up in 4 minutes. So I'll come back to this one, just take a look at it. But that would be my thought process. Okay. US 30. Since the last time we took a look at US 30 on that sale that we were talking about, when they end up having that large drop, the market has continued to fall, which was the expectation. Market pushed down, broke back up to the upside, gave a retest, and then after that, looking at the market, continued to be able to fall. Now, with that being said, we're looking at sellable positions. We got to end up going and just kind of breaking down the positions where we can get in and get out at. The next position where I think that the market will end up having a little bit of a hold up at will end up being at 38,380. So you can say 38,400 to be safe. But um, as this market on the 2 hour continues to kind of gather itself after hitting right here and right here, when it gives a counter trend line break to be able to sell, I'll be interested in being able to do that. It's already done a retest 36,560, so don't expect that it will continue to possibly push up there. Um, but if it does, then these points that we end up having 38,560, 38,660, and 38,750 will end up being areas where I'll look at being able to possibly um, look at being able to sell at if the market shows that that momentum is going to continue moving to the downside. Now it's 100. Now it's 100. The last time we ended up doing this, remember we ended up we ended up looking at a sale. Um, if I remember correctly, we looked at a sale, um, turned our eyes away, and then the market ended up making that sale to the downside, completing that position. Hopefully, everybody else that actually ended up taking a position while I was talking about it ended up making money off of it, but I didn't because I overlooked it and it was too late to be able to make the move to get in. So, um, currently, right now, what is happening? We're kind of seeing the same thing. Let's go back to the daily. Market completed the extension. Showing signs of the market continue to being able to fall. That's your outer trend line right there. Here is your inner trend line. The inner trend line has been broken. Typically, what happens is that when the outer trend line is broken, when the inner trend line is broken, it will gravitate toward the outer trend line, and then after that, continue to keep on moving to the downside or being able to make a decision in that area. So, um, let's look at a scalping opportunity. Because it's already in an R3 position. So that means to me the market will continue to be able to fall. And this one's a little bit clearer of a picture than any other ones that we have took a look at this point. A, B, got a little bit more room. Take profit position off of this one will end up being at the 128, which will be 17,287. So you can say 17,300 to be safe and being able to get out. Currently, the market is at 425, which means that it'll be 125 points if you were to take the order right now. Um, looking at a counter trend line break, we have that. We have momentum to the downside. It's below the B. That means that it's in a R3 position. R3 positions means that you look at one side move and you get more one-sided movement than anything else. And this market has already done broken the counter trend line break and retested already. So even though it's, as we look at it being 9:30 and typically seeing moves and stuff like that that may end up happening, this is telling you that it's ready to sell. And I would say go ahead and look at as long as it maintains downside movements, then I would look at being able to sell. Currently, right now, the market has just opened and we're in a no trade zone area, so just kind of wait it out, kind of pay attention to it. But I do think that ultimately the market will end up falling at this point. As long as the market doesn't break this counter trend line break, this purple line to the upside, or it doesn't break this last swing of 17,553, then I'll be interested in being able to sell. Not right now, but I'll be interested in being able to sell. Market just open. I don't want to sit up there and just jump in, and then after that, it flies somewhere just because of news or whatever else may be the case. Let's see. I'm going to go back to SPY real quick. I'm interested in being able to see how that market is moving. Okay, starting off the day, take a look at the 5-minute. Early indication market ended up falling down, so gives you a little bit more time to be a little bit more patient off of this move. If it doesn't break the counter trend line break to the downside, and close below the downside, then if it gives you a counter trend line break to the upside to be able to make the move, I like the position. So I would say just be patient on that one as well. If there's no questions, what I would like to be able to say is thank everybody for being able to watch Trade with Travis episode 319. If you do mind, please make sure that you end up clicking on Boost on Trade and View that allows other people to be able to see it, and make sure that you end up going to my other pages, Expert Advisor Reviews, where we're absolutely killing it. We end up having over 1,000 subscribers in the last month, being able to push through everything else like that. So a testament to them and a testament to everybody for us being able to work in the background, being able to get that done, being able to review some of the best automated trading systems on the MQL5 market, but also being able to trade them as well and being able to create them as well. So if you're interested in being able to learn a little bit more about that, just make sure that you just go ahead and subscribe to the channel and take a look at it and kind of go from there. Like always, make sure that you end up planning your trade your plan. We can see that the trading day is starting to get somewhere. I do like to sell off of NAS 100. I still do like the position. And I'll place my stop loss above 17,560 and just let it ride from there. But remember, take profit position off of that one be 17,300 if you end up getting that. Um, I'm personally am interested in being able to wait just a little bit, but that's my target. That will end up being my play right there. Okay, we'll come back tomorrow. We'll take a look at it and see how well we end up doing. Everybody, take it easy.